What's up, guys? So real quick, just wanted to give a quick apology on the streaming stuff. I'm trying to figure out how to do this simulcast thing, and it obviously was not working out. So it was doing two streams at once. So my apologies for that. We'll get that figured out. It's a work in progress. We're always trying to new things, and sometimes it works and sometimes it doesn't. But we'll get it all figured out. As Christian I can only see half his head. I don't know what's going on there.
I can't see his face either.
But we're gonna get it all figured out. It's just part of the process, right? It's part of the growth process. We'll get there, guys. But we have started a Twitch account, so we're working on getting our way into Twitch. We've noticed that there is not a very strong presence of stock market folks in there, and that there is a few, but we would like to be a part of that community as well. So we're trying to do it in a way that we can actually simulcast the whole thing. So tried to make that happen today, and it kind of went a little crazy, but it is what it is. We are still going to do our thing. So what's up, guys? Welcome to Own the Chaos. It is Wednesday, October 28th. It's 2 o'clock in the afternoon. And the stock market is still doing its thing. What I mean by that is just it's still rolling down the hill, and hasn't been pretty, hasn't been fun, but we're here with you anyway. And we're going to kind of talk some of you off the ledge, as it looks like some people, even Steve King, wants to throw up. So, we'll get into that kind of stuff later on the show. We got a lot going on. But Fat Man Zoom, did you get yourself situated over there?
Yeah, I'm center screen. I wanted to make an entrance, so I was like right here, and I was, just kind of popping in.
I got you.
William Williams in the house. But listen, it's a tough day. Market's down, hella down. But we just got to bring the energy. We got to bring the energy.
Yes.
We got to figure this out. We got to remain calm, like Aaron Rodgers says. RELAX. Chill out.
That's right. Relax, guys. It is not a time to react emotionally. And we kind of talked about this yesterday. I made one whole trade this entire week. And really dating back to last Thursday or Friday, I've made one whole trade since Thursday. And there's a reason for that. It's because we can't quite figured out which way the market's going to go. And right now it's just doing nothing but going down. So we're just going to sit here and relax and kind of watch and wait for our pitch. We talked about this, really kind of all week from last week into this week, and still ringing true. But we're going to be here with you. We're going to, console you if you need to be consoled, if you will. Tell you that to stop worrying if you're worrying. And we're also doing live reactions to some really important earnings today. I mean, that's the kind of silver lining. Even though the market continues to come down, so far earnings have been absolutely incredible. So there are some things that we should be able to be positive about. We talked about Microsoft having really great earnings, a stellar outlook, and we have some really big upcoming earnings this afternoon as well, including Fastly and Etsy, Visa, to name a few. We're also going to give some of our predictions for tomorrow. Speaking of tomorrow, 8 a.m. is when we'll be going live, and we'll be with you the entire day because it's just that and damn important. So we're going to be here with you the entire day, leading up through earnings. After hours tomorrow. It is our first all-day event, and we can't wait to be here with you guys. It's going to be super fun. I just cannot wait.
I can wait. I'm good with waiting.
It's going to be a long-ass day, man.
I'm gonna spend the night figuring out what the hell my strategy is for tomorrow. We try to get our 12,000 steps in a day. So I have no idea how that's going to happen tomorrow, but I'm going to figure out tonight. I'm low key tonight. I'm going to prepare, be well rested, and don't know what the hell is going to happen tomorrow.
I don't either, but we're going to go with it. It'll be our first event that we will be here all day. We just said, why not? What the hell? Let's just do it. So hopefully you guys will be around with us as well for that. Super pumped for it. Speaking of the stock market crashing and being down, I do have a poll out on Twitter, and this one's gonna. Lots of folks have been reacting to this one so far. If you guys go check me out at Own the Chaos, we'll show it, put it up on the screen here later on in the show. But got 94 votes that are already in. And the question is the stock market sell-off a clear overreaction? And do you plan to buy up stocks on this red day? 58% of you say yes. 41 say no. That's a pretty close split, much closer than yesterday's prediction on Microsoft, which everybody thought that they were going to handily beat, and they did. But that's quite a pretty close split, if I do say so myself. Fat Man Zoom, you surprised about that?
About the market sell-off?
About the reaction to some of our followers so far, that 60% say they're planning on buying today. And
yeah,
40%.
Man. Honestly, I'm in the same boat. We're like, I did pick up Zoom. I added to Zoom, but you know, I have been torqued because earlier in the week I felt I had sold off some stocks, took some profits to try to have some cash, and I scaled back in. And today just hit hard. But yeah, I mean, it's really leading up to this election. Like, well, what is going to happen to the election? Is this? It's hard to really pin down what this is in response to. And so this kind of sideways move, I think we're going to be okay. I'm not worried about it, but man, it's like, well, tomorrow should be a green day. I hope tomorrow will be a green day with everything that's going on. But I will be honest, I'm a little bit surprised today at how big of a move down we made.
Yeah, I mean, I think it's a little bit of an overreaction. I mean, based off of general consensus on a lot of folks right now, it's not so much the election, but it is the impact of increased corona cases, specifically in Europe. There's a lot of very unhappy folks in Italy. I was just looking at the news earlier, and people in Italy were really pissed off on not only just increased cases, but the impact that they're going to have if they decide to shut down, which it looks as if that's kind of the direction the government's leaning towards. So there's a lot of people that are angry there. And so some of that fear has waved over the U.S. We are seeing increased cases here too. But I think that we may have learned our lesson as far as a government shutdown and shutting down the entire country. And I would be hard pressed to kind of see that happen completely like we saw it before. I think maybe we'll see some shutting down in certain areas, but to see the type of shutdown we saw previously, I think that would be a little bit far-fetched. And so I think that's why people are reacting the way that they are today. It is cracking me up a little bit. Did you happen to see the controversy that happened in the World Series last night?
Yeah.
With the Josh Turner stuff that he basically played 8 innings and then told him he couldn't come back out to celebrate with his team. And it was like, well, you already played 8 innings with these guys. Like, how much worse is it going to get? So, I mean, like, some of the logic here is a little bit all over the place, but I think that this reaction is a little bit of an overreaction.
Wait. So you're saying you're on the side that you are okay that he came back out after you found out he was tested?
It doesn't make any sense to me. I mean, you've already played 8 innings with these guys. So, I mean, at that point, what's no,
I disagree. I wholeheartedly disagree. I think this is a microcosm of what the problem is. I don't think it's a problem of that we don't have the measures in place. I think it's a problem of shirking the measures, right? If we as a whole decide, you know what, like, we're going to go with it and we're going to, we're going to take statistics and say, we just got to go through with this, and to each person, like, kind of take care of themselves. I get that. But I think this is a microcosm of what the challenge is and why I think we'll probably end up in lockdown. Like it played out before with Italy. It was like, he found out he was positive, and then baseball is different when you're playing than when you're celebrating and you're 6 inches next to somebody. So and like not wearing a mask, I feel like, I don't know either way. Like, I hate wearing a mask, but
yeah, I mean, I'll still wear a mask.
I think when you test, it's not like, oh, because I tested and I was just around you, let me stay around you. And my coach who had cancer, let me be next to him. It seems like dumb to do it. I get you're celebrating, but it just seems kind of just dumb.
Yeah.
That's my opinion.
Yeah. I mean, I think that you're right. I think that the opinions that we both have are the opinions that a lot of people share across the board though, too. And I mean, that's probably some of it. I mean, there's just, it's so weird that people, I mean, there's so many things that go back and forth. You have Switzerland, who basically did herd immunity, and they're just out and about doing whatever they want now. And you don't hear cases about them over there. You have other places where it's just a mess, like in Italy. So it's just, I think there's a lot of just either misinformation or people just have no idea what's going on, and the uncertainty is just carrying over into the markets. And that's what we're seeing today.
So if we hung out and you found out I tested positive, you'd be cool with me hanging out again with no mask 6 inches from you.
I mean, if it was 5 minutes and it was like, oh, well, and you came back and said, hey, by the way, I have COVID. I'm like, well, we've already just hung out. I guess I might as well just hang out by myself. I mean, I don't know. I mean, I just saw you 5 minutes ago. I mean, I don't know. It's crazy.
Yeah, C-Bucks in my seat.
I know, but we've already talked about like the NFL and how that's crazy, and how, like, you know, you have to wear a mask if you're a coach on the field, but you everybody can just spit on each other on the field, and that doesn't make a difference. But if players come onto the sidelines, I don't know, just some of the logic just blows me away. Some of it just doesn't make sense.
Well, the NBA is the only one that abided by it.
Yeah,
and
that worked. The bubble worked.
They crushed it. It wasn't even about the bubble. It's about them listening.
Yeah.
We said that before. Does it make sense for coaches in masks? I don't know. I understand the point is like, why? You know, the coaches are around more people than the players outside of the NFL. And so, like, I don't know if I agree with it or disagree with it. I understand, but it is what it is. I agree. It's kind of pointless. You're around the players, but they clearly didn't listen. It's an example of, like, you follow it or not. And then if you decide, hey, you know what? Screw it. We're just going to go with it. I'm fine with that. If you're like, we're not going to wear masks, we're not going to care whoever tests positive. But I mean, I really appreciate that you'd still hang out with me. If you tested positive, I'll just be honest. I would be like, I don't care if we hung out 5 seconds ago. The moment you find out, I'll be like, I'll see you in 2 weeks, bro.
I hear you. I mean, you look at, I mean, that's the problem. There's no consistency. I think that's the biggest problem. You have the Big Ten that's following by certain rules, and rest of college football is following different rules. You have players that are out for 21 days if they get it. Then you have Nick Saban that has it for 24 hours and he's back out coaching. So it's like, none of it makes any sense.
Yeah.
So, but yeah, I mean, I think that's the biggest thing, is that there's just a severe lack of consistency across the board. And that's the biggest problem. But anyways, back to the stock market, and just kind of talking people off the ledge. You know, I talked to some folks in the mentorship this morning about this, and it's just like, we've seen this movie before. The stock market has been through quite a storm in the beginning of the year, especially in March, and this is kind of a much smaller storm than we have, than we experienced previously. And there's a lot of things that are very exciting about the stock market, but right now, as boring as it seems, it is best to just sit on your hands and wait for things to settle out, because right now it's, things just don't make sense as far as direction's concerned. And obviously the election should alleviate some of this pressure downward, hopefully, and then stimulus should be on the way and all that stuff. So just kind of waiting it out makes a ton of sense here. And in certain cases, it's just cool to be boring for a little bit.
Yeah, I would love to talk about the market too. I agree with you guys. I don't really, honestly, like, we talk about this all the time. It boils down to looking at what you're in as compared to the market and how the market's doing. And I really think the only time to certainly worry is if, like, your portfolio is outpacing the market in a negative way. And so, that doesn't, I'm sure that doesn't comfort a ton of people, but the reality is, like, okay, if it's moving with the market, there's nothing wrong with the stocks you're picking. You have to determine, what do you think the market's going to do?
Right.
And that's the $1 million question, is like, what is the market going to do? You've been saying it for the past couple of weeks, is like, you wouldn't want to be out of the market, so have something in the market. If people feel that way, then certainly keep something in the market. If you feel like it's going to be a bounce back, I mean, all this is speculative. Even what the reasons are speculative. You can make an argument that it could be anything.
Right.
It literally could be the elections. There's no one knows what that is. Obviously, the rise in COVID cases seems to make sense as the best theory. Okay, well, what does that mean for you and your strategy? If you believe that and you want to stay in the market, then like, okay, we're looking at stay-at-home plays. We're looking at COVID plays.
Right.
If you think it's overall market's just shit, the election, then maybe you hold on until afterwards and see how it plays out. Either way, if you can have some cash on hand, I think that's the strategy here, and just figuring out what your entries are. But again, man, if you got Apple, if you got Amazon, if you got Facebook, Tesla, you should be all right for the long term.
Yeah, I mean, and we've talked about that, about having a healthy balance of cash and being in the market. And then I've said repeatedly that, you know, I wouldn't want to be out of the market right now. You know, despite all of everything going on, I wouldn't want to have all of my money sitting aside on the sidelines and just waiting, because trying to predict the bottom is next to impossible. And we saw that with everything going on in March, when people were trying to say that, oh, this is going to continue to go down as it was going up, and the bottom, nobody really accurately predicted it. I would say it was probably about a week or two, and I actually said the bottom happened in March, way back in April. Sure enough, we were right about that. But I don't try to time the bottom of the market, and so that's why I'm saying, you know, I don't know if I'd want to be completely out. And you know, it's amazing to me to see some of these stocks that actually took a hit today that thrived through the possibility or the fears that people are thinking might happen in this quote unquote second wave, or whatever you want to call it. Because you see something like Zoom that's down considerably. To your point, Amazon is down below 3,200, which all of these stocks did extremely well during the Rona. And this was before stimulus got passed, any of that, because of the demand that they would need for them. Clorox is down, which, you know, you would think that would be one that you would want to get a hold of, because of demand that they'll need for cleaning products and hygiene and all that good stuff. So there are really good opportunities in that I would not want to be in, want to be out of some of these stocks, especially if you think that coronavirus is going to have a much stronger impact, or continue to have a strong impact on the economy as a whole. These are stocks that I'd still want to be in. I mean, you look at Walmart. Walmart's also down. So these are really good opportunities, I think, to get into some good, solid companies. The last thing that I'd want to be in, Fat Man Zoom, though, is some of these speculative stocks, as we talk about a lot. And the good ones are the ones you're going to want to go after.
Yeah, for sure. I mean, Peloton was the only one that actually stayed up, and it's still in the green, 0.5%. It's at right below 122. But that was actually kind of why I went with Zoom, because I feel like if it's truly the COVID concerns, then Zoom, which is down 4.5% right now, is a good opportunity and should bounce back, if that's the reason, right?
Yeah.
And so I think that's the best argument that could be made. So either that, if you really feel strongly about an earnings play, obviously that seems to be sort of countering the market. But here's the thing, you know, I want people to remember, and I learned this from you and from Don to a certain extent, was like, do whatever you want, but like, I'm not selling on red days. And it's more often that like, you should be buying on red days. You should be looking for these opportunities. Unfortunately, there's been a lot of red days, so you've probably already been buying. But what happens is, like, you see these days, you freak out, you sell, and then it goes up, and then you try to get back in. You just miss the move.
Right.
So, and it could go back down again. We already know that next week's going to be an interesting move anyway. So, you know, if you're already in, unless you're like, I'm going to sit and I think it's going to get a lot worse, or I have something better to invest it in, like I'm in something a little bit more speculative.
Yeah.
Like, I love Penn, but I felt like 2 days ago I needed to get out of Penn and then get into something that I felt a little bit more confident in, because I was unsure about sports, whatever. For the time being, I'm like, well, let me put in something that I'm more comfortable in. So I added in Apple. I added it I added on to Tesla. So, I'm most of my positions right now, all of my positions are red as far as on the day, but most of them are red, like a couple percent.
Right.
So, it is what it is. But just making sure you manage it and not just deciding whether you want to hold or add on to your position. If you really feel strongly about your companies and you're good, solid companies, I think that's the question. Do I hold or do I stay or do I add on? I don't know if you're going to get out unless you're like, this is bad for another 2 weeks.
Yeah. And I don't think I think people will be surprised about how quickly this turns around. And it just kind of goes back to our point of just like not trying to time the market. And if you guys aren't comfortable with it, it all comes down to your own risk tolerance, which everybody has a different level of. So if you're really not comfortable risking your own money on some of this stuff, then just don't trade it. But, we're here to just kind of say, if you are into some stuff or if you're thinking about getting into some stuff or whatever, just make sure that you have that conversation with yourself and be like, can I afford to lose some money in the short term and for the possibility that this is going to turn around in the longer term? And, getting into stuff like Apple and some of the other stocks that you mentioned is a great idea because Apple's not going anywhere. And we have earnings coming up, which should bode pretty well for them. We look at some of the earnings that came out. I can't believe Tupperware of all stocks is still freaking rolling. It's up like 34%. Came out with earnings and absolutely annihilated it. So we could see some really nice surprises out of that in the upcoming earnings today, tomorrow. Tomorrow's going to be huge. And so there could be some bright spots in an otherwise, or I should say green spots in an otherwise red market right now. But, speaking of earnings, we got some coming out today and so tomorrow. Wanted to talk about Microsoft's earnings as well that happened last night. If you guys were hanging around with us, we gave you our live reaction to that. And let's go ahead and just start off with Microsoft. What were your thoughts on the entire earnings report? Anything that struck you that you really liked a lot about Microsoft?
Not necessarily. It was. They did pretty much exactly what we thought they would do.
Yeah.
I didn't see how. So right now, currently, it's down 4%. Again, we got to take it with a grain of salt because if it was a green day, how it would have responded. We looked for that 50% number for 50% year-over-year growth for the cloud Azure. I think it came in at 48%. It beat slightly, but that 50% was really important. The LinkedIn, which they group it together, I forget what they call it, but they group LinkedIn in like 3 or 4 different other things.
Yeah.
Showed really good growth, which we thought, which was what we expected. So I was really excited about that. They didn't give us too much on gaming, so that remains to be seen. But everything that was said, I felt, for the short term, I understand why I didn't make a huge move up, but I feel really good about it leading into next earnings. I think this is a great stock. And as it gets down to 200, if by some chance it goes below 200, scoop this thing up if you believe in it. Like this is such a great opportunity around these levels.
Yeah, I think, and let's go ahead and just share the platform here and kind of give you a snapshot of Microsoft. So a couple of things of Microsoft. As far as their gaming is concerned, I did see that their Halo Infinite, their development head, is no longer with them. And then also they, as far as Azure is concerned, they did announce a data center region in Taiwan. So that is still going to continue to grow. And we talked about the cloud space yesterday about how some analysts were saying that things are going to be slowing down for them, in particular because of what they saw from SAP yesterday, which is ridiculous. But I think that cloud's still going to continue to explode in growth and demand. Whether we have a coronavirus vaccine or not, the cat's been let out of the bag as far as remote work's concerned, and that makes the cloud all that much more important. So looking at Microsoft right now, currently it's sitting at 204.70, and I agree 100%, Fat Man. I think that that if this is down below 200, it has got to be an easy buy here. I mean, it's almost a no-brainer at this point, especially with the way that they're growing. And I think that this is just going to be something that, if you look back on today, from January or February of next year, I think you're just going to sit here and laugh at the fact that you got this thing under $200 a share.
Yeah, absolutely. I want to step to a comment really quick. C Mike had mentioned he loves the 5% rule, not having more than one stock that's more than 5% of my portfolio. Even like a day like today, I'm barely negative on the day. Good on you if you're barely negative. That's awesome. And it's good you have a strategy. So that's different than my strategy, but you have a strategy and that's great, right? It's different in the sense of I have percentages, mine's a little bit greater, but that doesn't matter. What matters is that you have a plan and you're sticking to the plan and it's paying off for you. And to me, I say, if you're on a negative 3.5% down day for the market, if you're even, that's 4.5% or 3.5% that you basically netted right there. So that's awesome. I just wanted to point out the strategy part because we talk about that a lot.
Yeah, thanks, man. And that's super important. Having a plan, and more importantly, sticking to the plan, because there's so many people that deviate from that, and then they're all over the place and can't figure out what they're going to do. Knowing what you're going to do before you push the buy button is super crucial.
Yeah, absolutely. So anyway, sorry, back to Microsoft. All that stuff's good about Microsoft. AMD had earnings yesterday. I was surprised at the market reaction. I was also surprised specifically about the Xilinx deal. And maybe it was, I mean, how much do you think it was like a buy the rumor, sell the news type deal for the acquisition? Because Xilinx was up over 10%, but AMD was down.
Yeah, it's interesting. I'm not sure. I think there's probably some of the buy the rumor, sell the news in there. And if you look at the way the chart was set up, we go out to the 4-hour chart. You can see there was quite a run up on AMD the day before earnings came out, and so it's not really too much. Or 2 days before. Actually, you can go back here to let's see, the 22nd. So essentially a week leading up to earnings, this thing had just a massive move all the way from 78, went up as high as 82, and then had that sell off after earnings. AMD is still very much a buy, in my opinion. This is just a short-term profit-taking type of deal, and I'm agreeing with you here that I think it was more of a buy the rumor, sell the news type of thing. But moving forward, AMD is an absolute buy. It does this sometimes where it sells off on amazing earnings, and then it comes roaring back. So I think that there's a lot of things working against it. The aforementioned, but then also the overall market just moving down is obviously influencing the stock as well. So I think that AMD is definitely going to be a good buy. If there's an area that you're looking for that you would like to scoop up, I would say that if it somehow comes down to 73 and we start to see a bounce from there, could be a good spot. Right now, it's holding pretty decent above 75. But so those are two areas that I would maybe consider watching on AMD to see if we see some bouncing at those levels.
Yeah, for sure. So Ayil says, I'm all in. All right, good luck. I love anybody talking about Amazon selling, I'm not sure. I mean, I guess unless before earnings, but like we're big proponents on just hanging on to Amazon. Yeah. So Steve King, we're with you on that one. But I do appreciate about our community. Like, I do feel like this red day, which was worse, I think, than the last red day we had where we impromptu decided to go live. Yeah. I feel like people are handling it better. Yeah. Maybe that's just my sense, but it feels like there's not as much panic and like freaking out. So it feels like we're better prepared and our crew is better prepared in general.
I think so too. I think that even though I see a few people in here kind of freaking out a little bit, I think that I see less of that within our Chaos Crew fam, which, by the way, if you are one out there freaking out and you're not part of the crew and you're wondering how these people are keeping it together, it's because of the community that we've built over at the Chaos Crew. And if you want to be a part of that, it's $4.99 a month. You hit the join button. You get a daily watch list from us. You get private live streams. We get to talk you off the ledge. As you can see, people are starting to feel a little bit better about it. I actually ended up, because today seemed to be so rough, I ended up putting our watch list public today. So if you want to check that out, click the community tab on my channel, and you'll see the watch list coming that I put out today. And if that's something you want to be interested, if you'd be interested in, we'd love to have you over. Help support the channel. It's $4.99 a month. You can't beat it for the price. So we'd love to have you guys over.
Hey, real quick question. I'm trying to pull up Overstock, and for some reason I can't pull up the earnings. When is Overstock's earnings? Did it happen already?
I believe it's today.
Okay, here we go. Finally got it. Okay. Tomorrow.
Tomorrow. Okay.
29th?
Yeah, 29th. Yep. Tomorrow.
Pre-market.
So pre-market, yeah.
The only reason I brought it up was because somebody in the chat had said, who was this? Melissa Moffat had said, are people gonna Christmas shop Amazon and Walmart online? It's free shipping. And it made me think of Overstock, that during when the pandemic started, they decided to do free shipping, and now they're actually extending that forever. Like, it was such a great response from a business perspective that I guess they did a cost benefit and realized that, like, maybe they should just keep free shipping.
Yeah.
So I'm really interested in these Overstock earnings. So don't let me forget that tomorrow morning when we're looking at earnings results, because they're projected at a loss of 23 cents.
Mm-hmm.
And I don't know how they came up with these estimates, but I think they blow it out, man. And I think they actually might. I think they come in positive.
They could very easily blow this out. And to be honest with you, we talk about silver linings as far as the Rona is concerned. Overstock was on the brink of bankruptcy, and then COVID happened. I mean, the CEO, they got rid of their previous CEO. They were having a lot of accounting issues. They were in a lot of trouble as far as just accounting, and their CEO and the health of the company was absolute garbage. And then last quarter, they come out with a 90-cent earnings compared to a loss of 8-cent actual or estimated. And that's what caused them to go up. I'm still not sold on them just yet, but if they come out and blow these earnings away, it might make me have second thoughts about Overstock. But I agree. I think that those estimates are far too low. I mean, especially the way that they blew them out last quarter. We always talk about and joke about how these analysts, the suits, just can't get it together. And for whatever reason, they're so far behind with the times. I mean, we talked about this with Tesla and Rocket and some of the other ones that they just can't seem to get together. They still lean back on the banks and everything else when there's just so much other stuff moving in the market. And man, Overstock is just another example of that.
Yeah, absolutely. You know what? If you're cool with it, I'd like to call an audible.
Yeah.
And just see if we can take the Chaos Crew to lead us in the direction of where this live stream goes, just with all the issues going on.
Sure.
Maybe for the next 20, 30 minutes. And then at 3 o'clock, let's talk about the Amazon topic.
We can talk about Amazon. And then I also want to talk about Callaway too. So don't let me forget about Callaway. We talked about that this morning, and I forgot to mention that, but I'd really like to talk about it because I think it's a good opportunity. I see Travel McDuff. Welcome to the Chaos Crew, and Shane with the donate. Appreciate you, man. Thanks, guys.
All right. So we got a ton of questions.
I'm sure we do. These days they're like, it sucks, because we're in the market, but it definitely makes for a good live stream. That's for sure.
So go ahead and ask your questions. I'm probably not going to filter through all of these. Just ask your questions from here now. And then we'll get to it. All right. So I do appreciate everybody kind of talking other people off the ledge. All right. C-Buck. What's up, C-Buck? Yes. I actually switched over my Twitter. I'm about to activate it. So I'll start getting into that. But yeah, I now have official Fat Man Zoom Twitter. All right. So Vinay says, general statement, with marketing the way it is, earnings won't matter. What are your thoughts on that statement?
I mean, that's kind of proven to be the case here. We saw Microsoft that absolutely went crazy, right? And a couple other ones that went really nuts. My hope was going into this week is that we would see really positive earnings, a lot of uplifted outlooks, and that it would influence the market. Now, to be fair, we haven't seen the big players come in yet. So that's why we're going to be with you all day tomorrow. And I'm hopeful, I won't say that it for sure will happen, but I'm hopeful that if they blow out earnings, most of these bigger companies that are reporting tomorrow, Amazon, Apple, we have a bunch of other ones that just escaped me. But it's a huge day tomorrow, and so
Facebook, Google, all
yeah,
the good ones.
yeah, all the big ones. Most of FANG reports tomorrow after hours. So I think that if they come out and say, we have a really upbeat outlook, and this would happen with or without stimulus, I think that this could be enough to kind of limp the markets along a little bit to the upside, at least until we get stimulus through and that sort of thing. And then the election goes is done and over with. And so that's my hope. This is kind of what I was looking forward to going into this week from Stockwatch Sunday. So that's kind of my thing, but I'm not sitting here and saying that there's a guarantee that if they beat earnings that the market will react. It's just kind of what I'm hoping that will happen.
Juan, ¿qué pasa, muchacho? Aaron Chen. So I don't know this stock, Akamai. There's no ticker. Try to give tickers, guys. AKAMAI.
Yeah, I see it.
So that dropped 10% after earnings. Do you guys see Fastly doing the same thing?
Akamai, their third quarter sales spiked, fueled by cloud security demand is what I'm seeing from the smarter analyst. And Fastly has earnings today after hours. As far as Akamai is concerned, they came in at $1.31, beat their 123 estimate. I'm not sure what the sell-off is for, other than maybe it's just influenced by the rest of the market. It is down 10% right now. I really don't have an answer for you at this moment. As far as Fastly is concerned, it came down to a level where I said that it seemed as if it made sense to buy it, which I actually did for the public account. So for those of you in the Chaos Crew that get access to this, that's kind of what my thoughts were on buying that for the public account. Just started to work my way into it. Didn't go crazy. Only have about 10 shares of it. So just kind of buying and waiting to see what happens here. But it's down to $71 after coming off of its 136.50 high. And we kind of talked about this a little bit yesterday, but I think Fastly's still a buy. I mean, I know that it might seem painful to look at it right now and think that you want to buy it up, but this is the time that you would want to look at something like this, and maybe just wait till after earnings go through if you're not comfortable holding on through them, and see what happens afterwards. But I like Fastly down here. It doesn't make a whole lot of sense for it to be this low at this time now. I mean, I put it in the watch list today and said that, Fastly, they have the capability of 20, it was over 20 terabytes of data to stream a minute or an hour. It was just an insane number, and I have to go back and look at my notes, but absolutely crazy that it's down this low, because they still have the potential to continue to grow with or without TikTok, and that's kind of where I stand on it at this point in time.
Casey Bax, what up, Casey? Question: Direxion ETFs, DPST, have been absolutely hammered. I guess it went from 500 to less than $50, but in a few years may cover back to previous median levels. Thoughts on these triple leveraged ETFs?
Triple leveraged ETFs are the devil. It's not coming back. They have this thing called the decay. So leverage ETFs decay over time, and then they reverse split, and then they continue to decay. You see how this has come down, and it has come down a ton. Leverage ETFs are great for day traders. They are not good to hold on to, period. For me personally, I would stay away completely.
Yeah. All right. So in regards to DraftKings and Penn, so Eric Scarl asks, is DraftKings a dead dog, holding it in Penn?
DraftKings is not a dead dog. It's come down. It's sitting here at 38.73. We've talked about how we prefer Penn over DraftKings, and the reason being, one of the largest reasons being, is that DraftKings spending is a bit much. They're pretty much trying to grow at all costs, which rarely ever works in business. We've seen so many businesses try to do this, and they look good on front facing and on the surface, but you start to dive a little bit deeper into that balance sheet and it looks pretty rough. They've gone through secondary offerings, dilution, and then they had lockup periods that ended. So there's a lot of things going against DraftKings, not just the overall market that has pushed them down this far. I wouldn't say it's a dead dog, but we got to see some buying return on this thing before I would feel confident in DraftKings, which is why I like Penn a lot better than DraftKings, because they don't have those issues that they're working with, and they also have a fairly decent balance sheet, all things considered, especially in the entertainment business. And I think that they'll come back just fine.
Absolutely. Okay. Next we have Retirement. What's up, Retirement? What is a good entry price into Mattel?
I think Mattel had great earnings for one, and has not given up any of their gains after their earnings report, which is astounding. We've seen some really good earnings, and these companies have just continued to move up, and they look great. Mattel looks awesome. As far as where I would look to enter on this thing, tough to see a situation in which this actually comes back down to fill any kind of gaps here. So I would say that if it pulls back down below 14, we start to see it around 1375, then maybe that's a reasonable area. But man, this thing looks great. It has not given up any of its gains after its blockbuster earnings.
Shopify. Thoughts on Shopify, which has earnings coming up
tomorrow morning.
Pre-market tomorrow morning.
So Shopify is obviously having a bad day as well. After having an awesome day yesterday, I think that they crush earnings. Whether or not you want to hold through them is obviously entirely up to you, but I like Shopify as a hold. It's right up there with Amazon and a lot of the other e-commerce companies. Shopify is great.
I agree, man.
By the way, go ahead.
I just don't really understand these estimates. Like, I think that there was just such uncertainty last earnings that and if you gotta remember those, let's say July, in July, we probably thought differently about where we would be and where the market would be. And so I think a lot of these companies that benefited off stay-at-home tempered expectations. But Shopify, I mean, they came in at $1.05 last earnings. And so I just got to believe that 51 cents a share as their estimate is just really low.
Yeah.
Like, I don't know. I agree. I think they're going to crush it. And I wouldn't be surprised if this came in over $1 a share again.
Yeah. What was the estimate?
51 cents.
Yeah, that's a joke. That's a joke.
Yeah.
I think they come in over $1 as well.
For perspective, the estimate last earnings was 1 penny.
Right.
Profitable by 1 cent. And they came in at $1.05.
Yeah.
Right? It's insane. So
yeah, they're out of touch. They really are.
So we'll see what happens. But I think a lot of these companies are doing that because there was such uncertainty.
Mm-hmm.
You want to set the bar low just to make sure that, you can account for anything that happens either way.
Right.
So who was it? Ab Yoga made a statement to note Microsoft also gave lower than expected guidance. I want to touch back on Microsoft because I came upon this really cool chart. It did come so it came a little bit lower than analyst expectations guidance. So they didn't lower their guidance. It was just analyst expectation of guidance. But with revenue, they had put their next quarter revenue so fiscal second quarter, they put it at $39.95 billion, which is the middle of the range they gave. They gave 39.5 and 40.4. The consensus was 40.43. So we've said this before, guidance has to be considerably higher. So that makes sense. But I don't know if it was much of a difference. The high end of the range was 40.4 and their estimates were 40.43. I very well expect them to beat that. But the chart I wanted to show you. So my point is I don't know if the guidance was that material. But there's this cool chart that basically shows, and this is on CNBC. If you just type in Microsoft, it comes up as one of the articles. It says their products and services growth. So we had said last month, last quarter, that it was the first quarter they didn't have 50% growth in Azure. So they came in at 47%.
Right.
This quarter, they came in at 48. Just real quickly, the previous three quarters, 59%, 62, 59%. And remember, as we keep growing, it gets harder and harder to maintain that 50% growth year over year. So just 2 years ago, it was at 100% growth. So factor that in, but it actually breaks down the segments. So I was looking for the LinkedIn. LinkedIn is in dynamic products and cloud services. That is what LinkedIn falls under.
Yeah.
That is, that was at 13% growth last quarter. That's at 19%. So pretty considerable, almost 50% increase in that growth. And then 365 grew, cloud services grew, and consumer products for cloud services grew. There are only two negatives, which was search ads, but it was negative 18%. It was negative 10%. So it was a little bit better. And then also Windows operating system. So that was down 5%, which is the first time that's been in the negative. So it looks like a lot of positive, but yeah, those were the couple things that kind of like pushed it away. Also, I did find Xbox content and gaming services. It was up 65% last quarter. It was up 30% this quarter. So it's very interesting as well.
Wow.
Looking to see that number be bigger next time.
Yeah, for sure. Those are all really good numbers still. And just to kind of, give our post reaction on Microsoft, look, the thing's still a buy. Sitting at, like we talked about earlier, sitting at 204. They're just going to keep continuing to grow. We always talk about how this is kind of the redheaded stepchild of FANG, and everybody kind of forgets about Microsoft. But man, this thing still rolling and it still looks good with everything that they have going on. 2021 still going to be a good year for them. We just like it a lot at these levels. It doesn't seem like it deserves to be all the way down here. So definitely a clear buy. Wanted to check in with our community. We have 481 concurrent folks hanging out with us, so we appreciate you guys. Thanks for hanging out. If you guys can give us a like, a thumbs up. We only have 107 of those, which is kind of weak sauce. So if you guys wanted to give us a thumbs up, help support the channel, we certainly would appreciate it. Get us pushed out there a little bit more. And if you guys want to be part of the conversation, make sure you're hitting that join button to be part of the Chaos crew. We'd love to have you over.
Sievert, I just noticed I didn't get the watch list today. So a few people had that problem. I think it had to do with the fact that it was public, open to everybody.
Yeah. So
if you go to the community tab on the channel, it should be there.
Yeah. Yeah. So that was my fault. I think moving forward, if I ever decide to make the watch list public again, I'll just post it twice, because I didn't realize that if I post it publicly, you guys don't, for those of you in the Chaos crew, don't actually get the notification. So I'll end up making a public post and then a Chaos crew post just to make sure everybody gets it. So moving forward, my bad on that, but it is in the a community tab. If you guys go to my channel, the homepage, and click on the community tab, it'll be there for you.
All right. Wayfair. Oh my God, Lick It John. Haven't seen you in a while. What's going on? Wayfair, thoughts, please. Should I buy more?
Wayfair is actually looking pretty good over the last couple of days. It's up 3% right now. Do they have earnings coming up? I haven't checked on them as far as earnings.
I can look it up.
8.5 was their last one, probably somewhere around next week or the week after, I'd venture to guess. But it looks good,
Number
man.
3rd.
What is it, next week?
Yeah.
You're all right over there.
Yeah, I just got stuck. I had like a dead leg.
That face was a little crazy looking. So no, but Wayfair is going to do good for the same reasons. This is ironically enough, Wayfair is going nuts, but Rocket isn't, right? And people love Wayfair because the people in the comments already, I think Wayfair is good. We already saw that the increase in home buying has been a thing, and Wayfair continues to go up because of that. People are decorating their homes, whether they're new or old, getting ready to sell them or buying them up. So I like Wayfair a lot. I think that they also crush earnings next go around. Last time around, estimated earnings were $1.03, came in at $3.13 with a 201% beat. I think they have something similar this time around too.
So a lot of people are saying things about Rocket. Do you, and Shane had said, bring the beers for tomorrow's streams.
Hell yeah.
Listen, there's that line. you can't drink all day if you don't start in the morning. So kudos to anybody that drinks all day tomorrow. But I feel like we need to create a drinking game, and it's probably surrounded by Rocket.
Yeah. Yeah. And I think that we'll have to figure out how to make that work, because I almost feel as if we should make it silent and let people figure out what it is about Rocket that will cause us to drink. Because if we just lay it out there and say, this is what will happen, like if everybody mentions Rocket, yeah, so then I'll be fucking wasted by 11 a.m. and we'll throw this whole thing out the window. But, yeah, I kind of like that idea, to be honest with you, but I think it should be a secret drinking game and not let everybody, they can figure it out along the way. But look, Rocket, same thing. It's just been moving down with the rest of the market. I haven't touched it, and I got no reason to touch it. It can just sit here. The price is getting a little crazy right now, and I'm just going to sit here and wait on it.
So here's the deal, people. Put my laptop away. A chart is a story that's being told, and nothing is guaranteed, but it's full of supports and resistances. And at no point in time has Brad ever said, because there is a support, that means that it's guaranteed to stay there. All right. So do I say it in a different language? Until something material changes about the stock, the market moving down and Rocket moving in that direction isn't enough for me to freak out about selling the stock. If anything, if I believe in the stock, which I do, here's what I understand. The market's not going to figure it out. It's going to take something, or they're not going to figure it out on their own just out of the blue. It's going to take something that turns them around. So we need a positive catalyst. So it needs to be Rocket saying, hey, we're seeing higher volume of applications, or a surge, the demand comes back in home sales, but it's really probably going to take earnings. So I think this is ridiculous. Could it go lower? Yes. So at 17 and 16, it's just still going to be the same. Unfortunately, it fell below that 20. And the only reason I believe it fell below that 20 is the support line is because the market just had a horrible day and it went down. So I'm in the same boat as you. I'm not adding to it. I'm holding. I'm just holding. And I don't know what it's going to take for me to sell if everything remains equal and they don't sell anything.
Yeah.
So, hasta que una cosa que ocurre, que está material, no voy a hacer nada hasta que yo trago dinero. Okay? You got it?
I love that.
That will work for you people.
I love that. That was amazing. That was amazing.
So anyways, yeah, I think that's what people miss the most about what you say. And you say it a lot, but maybe they're new people. The supports and so there's so I'm going to spit this back to you, because I feel like I'm a representative of the people, and I take what you learn and I kind of try to bridge the gap. I take what you teach and I bridge the gap. So here's what you've said, and I think this is important. You start with the trend. So what's the trend? And we think overall the trend of the market is up. We think that the trend of the stock should be up. Maybe Rock's a little bit different, but the trend of the market is up, so we're bullish.
Yeah.
So then we go to supports and resistances, and the supports and resistances are where we determine if we're getting into a stock or if we're taking profits. And so they allow us to see how we think the stock's going to move. But supports is the next sort of thing we're looking at, but it doesn't mean that we're guaranteed to do anything yet. The next part, and the one that people miss, is the confirmation and the return to buying, which we talked about yesterday. Just because we see a support doesn't mean that it's that we're getting in on that. There's got to be that confirmation and the return to buying where it moves back up and the trend goes back to positive. So short-term trend, Rocket is down, but I think the long-term trend is still bullish for Rocket, and it still should be fine. Unfortunately, it's a little bit different because It's a newer company traded publicly.
Yeah, and look, they talked about acquiring a Canadian mortgage platform with Infimo yesterday, which has been also good stuff. I mean, they have so much cash, it's crazy. Their balance sheets are great. So even as a private company, they were doing well. And for it to be priced all the way down here just makes zero sense. They have earnings coming out next week. I'm super pumped for it. I got no reason to sell. Not going to sit here and tell you to just go ahead and buy all you can here. I would just say if you're looking to buy some on the cheap, it looks like it seems to make sense. The next area that we could actually look for this to potentially come off of would be around 1827. It's at 1895 now. So if you're just buying it on a whim, it doesn't make a whole lot of sense from a chart perspective, but it's just been beat down so much that if you just want to get some or add some or maybe average down, maybe that makes sense. But for right now, Fat Man Zoom and I are holding. We got no reason to sell. We still have a very high conviction on Rocket and think it's going to absolutely crush. The comments are cracking me up. Fat Man Zoom is Puerto Rican. That's how he knows Spanish.
All right. So when is Nokia's earnings?
Tomorrow pre-market.
Oh, they are?
Yeah.
Oh, snap.
I know. That's why we're going live all day, baby. There's so many of them.
I didn't even realize that. Do you know what the estimate is? Because I'm not seeing it on Yahoo Finance.
Yeah, let me see. It actually is. Are you going into the analysis tab?
I just do a search and it shows all of them. No, I don't think I'm in the analysis tab.
All right. So here's the tidbit for Fat Man Zoom and for anybody else who's watching. If you go to Yahoo Finance and you want to know what the estimates are, you go, I'm just sharing my screen here with you and showing you. You can go and search any ticker you want. You go to the analysis tab here, and it gives you the consensus. So the average estimate here right now is at 0.07 cents per share. That's what the expectations are for Nokia for tomorrow.
Gotcha. Sorry, I wasn't paying attention to what you said it was. 7 cents a share?
Yeah, 7 cents a share is what the expectation is for Nokia. And this is one we actually really like a lot as a 5G play. If you guys didn't catch the news last week, they actually got the nod to build a 4G cellular network on the moon, which is pretty crazy. But so they have earnings tomorrow. I think this is a really good 5G play. They got a lot going on in South America too, which is kind of crazy to think about. But if you want something that's cheap and kind of flying under the radar as it relates to 5G, Nokia is going to probably be a low-key runner. I like it a lot.
It'll be interesting. It's a coin flip for them, but they beat last quarter and they came in at 7 cents. So it looks like they kept the same mark. So, man, if they beat, we shall see. Camilo, can you guys talk about Pinterest earning calls? Expectations, guesses, should hold, buy, or sell. So Camilo's already in and down a bit.
Yeah, so Pinterest was one that we have talked about at length after Snapchat's monster earnings. And this is why Pinterest actually ended up gapping up here. If you guys look at this on the daily chart, Snap came out with really great earnings and Pinterest continued to run up. And Fat Man Zoom, what did we say after that gap up and the rest of social media? Do you remember about what the caution that we kind of presented as far as social media after the gap up from Snapchat's earnings?
Yeah, we're just cautious of the move. That may have been the move.
Right. And I think that's what you guys, need to kind of consider, that perhaps the price that we are seeing now on Pinterest and Facebook and Twitter could be baked in here. And I'm not saying that Pinterest can't continue to move, especially if they beat earnings and they come out with some huge outlook. But there is a certain possibility that this actually moves up or this actually comes down because the move has kind of already been made. They're already predicting that they are going to beat. And if they do beat, there might be some profit taking unless they completely blow everything out of the water that everybody was expecting. They got to come up with something that would really surprise people.
Yeah, and for our earnings predictions that we made yesterday, Pinterest expected 2 cents a share. Brad and I both have them beating. Brad had them beating beating at 3 cents a share, and I had them beating at 5 cents a share. So we shall see. And I was going to say barely, but like 3 cents a share is technically 50%,
Yeah.
right?
Yeah.
So that's actually, I'm at like 150%. So we'll see how they come in. And then somebody mentioned Fastly, just to give those, when we talked about Fastly before, our predictions for Fastly, which will be interesting because Brad and I are kind of on two sides of the fence with this. So they're predicted at break even, 0 cents a share. Brad had them beating at positive 2 cents. And I actually have them at a loss of a cent, and I have it missing. So that one's going to be one that's going to be interesting. I still am a fan of Fastly long term, though. All right. So
Melissa, thanks for the donate. Appreciate it.
let's talk about
Or Felicia,
Wells
sorry.
Fargo. Santiago's Munoz. Guys, what's your take on Wells Fargo reaching today the lowest since COVID outbreak? Is it a buy with a major discount?
I'm not a big fan of Wells Fargo, to be honest with you.
Is Wells Fargo like the American Airlines of the banking industry?
They gotta be. I mean, after all the issues with them kind of fudging numbers and kind of running through people on subscriptions, even though they didn't sign up for them and stuff like that. When all that controversy happened, I don't know how anybody invested in Wells Fargo ever again, but they do somehow. But looking at their latest earnings, their outlook was not good at all. And there's just far better banks out there. We talked about Goldman Sachs being one. So if you want to get into a bank, that would be one that I would get into. There's no reason you could convince me to invest in Wells Fargo.
Yeah. So, what was that low back in the beginning of COVID?
Back at the beginning of COVID, the low for them was at 21.98, and we're now below that.
So what Santiago said, reaching today the lowest since COVID outbreak. So I think this is another thing that I'm not saying I'm right, but something to consider. And I think where people kind of make a mistake when they get into the market is because they see the COVID low, and then they're like, well, it went lower than that. The classic line is, how much lower can it go?
Right.
Don't fall for that. It's again, like if you use that as a support, like obviously a lot of stocks are far from a COVID low, but to me, that's a bigger red flag than it is an opportunity. So the fact that it fell below the COVID low, that's trouble. I mean, I'm really hard pressed to find a good reason to buy banks, let alone what arguably is the worst leveraged one in its sector. So like Wells Fargo just has a lot of things going against it. Catalysts are far from coming for banks, and the banks that are doing well are the ones that are leaning into the wealth management, and Wells Fargo isn't in that,
right,
to the same extent as like a Goldman Sachs or a Morgan Stanley. So I understand the logic. Well, it's lower than the COVID lows. That's a problem. Could it go back up? Absolutely, it could go back up. But like, I'm not risking. This is a perfect example of a spec play Brad was talking about. Probably get into something you're a little bit more confident in for the long term.
And when we talk about Goldman Sachs, the reason why we like it so much is because they were able to pivot during the peak of the coronavirus, and when everybody was shut down. They just sent everybody home, and they all worked remotely, and 97% of their employees worked from home, and they were still able to maintain the level of efficiency, if not more efficient when it came to all of their trading activity and everything. So I like Goldman Sachs a lot. If you want to go for a bank, that would be one that I would say would be worth going towards.
Felicia's Brad's Jack Daniels fund.
Yeah, she got to donate. I saw the comment there. Thanks, Felicia, for that. Appreciate it.
Camilo said, I miss Latifa, electrical engineer.
Yeah, where's she at?
Tan179, September, I was prepared to buy when the market dipped. I was buying like Black Friday. I really thought the market will drop next week, so I loaded up on Amazon, 33.48 last week for earnings this week. Another point for this question, and then for the question on Wells Fargo, the caveat to that I probably need to say is, what's your time horizon? Because if this is extremely long term, then okay. Still probably wouldn't get in right now, but I'm not mad at that move for the long term. But again, like Amazon 33.48 isn't a bad entry. so if you're in it for the long term, you should be all right. Which I think will take us into the 3 o'clock topic, which is Amazon. But before, why don't you go ahead and jump into Callaway, and then we'll move on to Amazon.
Yeah, so Callaway is one that got beat down today. And it's ticker symbol ELY. They came out with news today that they are buying up the rest of Topgolf. It's probably untimely for Topgolf because I imagine that there's not a whole lot of people at Topgolf. If you guys don't know what Topgolf is, I told people this morning to just Google it because I probably won't give the best explanation. But if you're not familiar with what they are, they're basically in the entertainment space. It is a driving range in which you can go out with your friends and kind of play games and compete against each other at the range with like certain targets that you can play with. But it's also a bar and restaurant. They have the bar and restaurant side of things as well. It's just a really great concept. And given the way that they charge for this thing, I imagine that their margins have to be pretty good. But Callaway bought the rest of them. So now Callaway will be owning 100% of Topgolf, and the growth potential for Topgolf, I think, is absolutely enormous because if you've ever been to Topgolf, the experience is great. And, I think Callaway made an excellent move. The stock tanked because of them acquiring all of Topgolf, and I think the reason that it tanked was because of the fears of the Rona. So I think this is a very temporary thing as far as the sell-off is concerned. With it sitting here at 1560 right now, as we speak, I think that the potential for Callaway to continue to move up, especially as more and more people are playing golf. Christian, you and I know that we've seen a lot more golfers out and the demand for golf in general. And so just that side of things, plus being able to acquire Topgolf, I think this is a good opportunity to get into Callaway.
Yeah, it is. So a couple things to note, and I didn't actually, I just looked through the news channel, and I'm not sure if you realize this because I didn't realize this. Was that the deal is under investigation. So I don't know if it's because of the deal. So,
I didn't catch that either. Yeah.
Yeah. So it's not, it actually came out, I think at 12:30, but yeah. So basically there's, the Rogorski and Long, which is a legal firm, is investigating a possible breach of fiduciary duties and violations regarding to the agreement to merge with Topgolf.
I've seen those before. Nobody cares about those. They always try to do these class action lawsuits, and I don't know if I would put much emphasis on that.
Okay, so I don't know. It's down 20%. I don't know if that has anything to do with it.
No, it was down 20% before that.
Okay, so so that was announced at 5:31 yesterday. 4:45 yesterday, I think, was when that's the agreement came out. But they'd already owned a stake in it. I think that's important for people to know. Like,
yep.
So that I think that bodes well to what you would think about as far as they obviously know the business. So if you're willing to buy the rest of it, that's important. I told you about Drive Shack, which ticker symbol DS. I didn't want to bring it to the crew because I felt like it was way too speculative for me to co-sign on it, but I personally have it.
Mm-hmm.
And the reason why I believe in it is the reason why I actually believe Topgolf is going to outperform the industry. And actually, as far as Drive Shack is concerned, I can't speak to Topgolf. So they're direct competitors. They do the exact same thing in different markets. Drive Shack's demand is back. They're not slow, but they do have high costs. Their demand is back overall. The only thing that's hurting them is social distancing, so they can't reach capacity the same way, and they're huge venues, so They have to be at capacity.
Right.
But I love these models because they're actually built for the bounce back, like the reopening.
Right.
Like they're literally. The model is social distance. So like for the reasons why we don't like other hospitality plays, the reason why I really like these companies because they have stalls. So you can only be with your group and you're separated from the next group. They're outdoors, which is what we're being told is it's better to be outdoors than indoors as far as COVID. They have heaters, so they'll be fine over the winter. So they're covered, but they're still kind of open air. So for all those reasons, I think like if you were going to build something post-COVID, you would build this type of model. And so I think this is great. Callaway is going to be owning Topgolf. Ping, which is another very popular brand, has a partnership. They don't own Drive Shack, but they have a partnership with Drive Shack. The only issue is like it's such a high break even for these companies, and there's just a high cost to it. But I think for the long term, these will be okay.
Yeah, I just it doesn't seem to make a whole ton of sense to see Callaway all the way down here just because they're looking to acquire all of Topgolf, and for investors, I guess the fear is that they're taking on too much risk here with Topgolf, but I wholeheartedly disagree with that, and I think this is going to be an excellent move for Callaway moving forward. The short term, obviously not so good, but it looks like it actually came down and bounced off of this $14.71 area. You can see that this has done nothing but go up since the bottom of the market, and the reason being is to a lot of the points that Fat Man Zoom made was just this is a perfect social distancing activity to where you can just be with your close group of folks, and you can go out and golf and be away from everybody. You're outside. And so I think this is a great opportunity to maybe get in on some Callaway, especially with it sitting all the way down at $15 a share. I think the upside here is pretty good.
Well, so they have earnings today after hours, right?
I thought that was today, but maybe it is after hours. I thought it was this morning.
Okay, so I think it's after hours today.
Okay.
And it's 27 cents a share. The other thing, just talking about Callaway in general, Callaway, I mean, golf is a sport that's also built for COVID as well. Let's remember that.
Right.
Like, I love basketball. I can't play basketball, and I'm not going to be able to play basketball for a long time. So you hear, I mean, just even in our community, the amount of people that are picking up golf because there's not many sports you can actually do.
Us too. We're golfing more. We talk about it all the time.
Yeah. So I think, man, these expectations are high, but they must have built this guidance knowing that it's going to be high demand. I mean, this might be a good opportunity. And like, you know, if they, because, okay, so last quarter, they projected a loss of 2 cents and they beat 6 cents.
Yep.
Now their estimates is 27 cents.
Holy cow. Jesus. Okay.
I think it's a good bet if you're going to make a bet.
Yeah.
So we'll see, man. You're kind of making me want to think about getting Callaway.
Yeah. I mean, maybe just waiting until after earnings come out and see what happens, but I think this is a good opportunity for them. Oh yeah, Felicia's in Arizona. I forgot. Arizona is a huge golf state. For any of you guys in Arizona, she said Topgolf is always packed, and they have tons of Topgolfs out there. So she said it's great for everyone, even crappy golfers like me. So yeah, that's the other thing. It's not, you don't have to be good at golf to go to Topgolf.
Drive Shack, yeah, it's going to be the thing to do when you're outings. Like, it's like we're not going to movie theaters, indoors, too packed. We're not going to go to bars, indoors, too packed. Like, this is what we're going to do. And the fact that they can make it through the winter, they're going to be total fine. Bro, the Drive Shack in Raleigh, before COVID, I went in February. And I tried to go 2 different days, and I did not make it in because it was a 3.5 hour wait.
Jesus. That's
3.5 hour wait.
That's crazy.
You know? And so, and Topgolf is further along as far as market share, and they have greater penetration into the market.
Yep.
Topgolf has greater market penetration. So yeah, man, these companies are going to be fine as far as my belief. And I feel like I've been 100% on hospitality calls. So when you hear Fat Man Zoom say it, book it in regards to hospitality.
Absolutely. I see Landon said who we got? Steve King says he got a whole set of Callaway golf clubs. Landon says I'm playing new TaylorMade 7MC irons. I got a new TaylorMade M6 driver, so I'm super pumped. I love that driver too. But yeah, we could talk golf all day. But yeah, it's no secret the demand is certainly there, and we'll see what they look like after earnings. And we're gonna have to keep this on the list too. We'll give our reaction on earnings on this one too. There's so many good ones coming out today, but tomorrow is going to be the big day, which you guys know know that we're going to be here live. We've talked about it now quite a bit. We're going to be live from 8 a.m. all day long. We'll be here with you guys all the way through earnings after hours tomorrow. It's that important of a day. We're super pumped for it. And we got Amazon that we kind of wanted to chat with you guys on this afternoon to kind of give you a prediction on where we think it's headed and what the earnings should look like for tomorrow. So what you got for me, my man?
Yeah, so Amazon earnings tomorrow, the estimate is 725 a share, and I don't think it's a surprise to anybody that we both think they're going to beat. Now,
Yes.
I haven't heard your estimate yet. We'll get to that in a second, but let me just give perspective for last earnings. Last earnings estimate were $1.46 a share, and they came in at $10.30 a share, which is absolutely nuts. So I believe that your number will be above $10. I feel confident that it will be above $10. And I think we both feel like $7 is kind of stupid for guidance. But I want you to tell me what your estimate is and why.
My estimate for Amazon was $11.20.
All right.
So I still think they come in double digits, and I think that the estimate for Amazon from the analyst is an absolute joke. This is another one of those classic examples of what the hell are they smoking. Amazon is going to absolutely crush. The demand here for e-commerce and really just kind of small business. We saw the amount of growth on Wix, right? If you guys aren't familiar with Wix, it is a platform in which you can create your own websites to sell things on, whatever. Amazon, I think they absolutely crushed for that reason. They've also talked about how they needed to hire an additional 50 to 100,000 employees over this past quarter to keep up with demand. They've had to slow some things down a little bit so they could actually catch up to some of the demand that they're experiencing. And I think that Amazon absolutely obliterates earnings. No doubt about it in my book.
Yeah, I wish if you're open to it, I think you should do this poll tomorrow. Try to do a consumer sentiment poll about people using Amazon, because here's my hunch. Who said this? Somebody said Aaron Chen said, no joke, but I'm seeing Amazon delivering trucks everywhere.
Yeah.
I'm seeing Amazon everywhere too. It's insane. And people I know, I'm seeing Amazon boxes all over their houses. So what are you going to do when you're home? Typically, the summertime going into the fall for Amazon is this quarter is a little bit is lower historically. And then obviously the holiday season comes and we're back in it. I don't think that's the case. So let me tell you why, and then I'll give you my estimates. So first off, we knew that July was Prime Day. That got moved to a few weeks ago. So that was the beginning of October. Now that actually falls right outside of this quarter, but I think we'll get an idea in the call of how well Prime Day did, which will be an indication of future revenues. But I think they blow it out. I think they have a better quarter than they did last time. A couple keys to look at. Actually, let me give you here's my estimate, $12.69. Shout out Steve King. But I wanted to double it so bad. I wanted to be 1450 so bad.
Yeah.
But I did some number crunching, and I based it on a percentage that I felt was strong enough. It came in at 1269. And so I think they beat. I'm going to be really surprised if this comes in below $10. Here's a couple things to think about, though, when we talk about Amazon earnings. So I have a Whole Foods next to me, which is owned by Amazon. And there are, honestly, Brad, I think 2-to-1 delivery people to shoppers, in-store shoppers. The amount of people, so you can see the people who actually work for Amazon who are getting the groceries and who are delivering them. Maybe it's 3-to-1, bro. It's insane the amount of people using it. And what we talked about after last earnings was what we saw as a huge opportunity for growth for the future for Amazon in the grocery business, taking market share from the likes of Walmart and Costco. So that to me bodes really well for their grocery side of business, which I think is going to really surprise people. But again, that's not the big thing, right? We want to know about cloud. People think like obviously the sales are good, but there's so many things that if they can put it all together, if they come in the Prime subscription numbers where users are growing, if they come in with grocery store business growing, if cloud's growing, if all that, and also orders are growing, if all that stuff hits, man, this could be this could be sort of like the catalyst for us getting over that $3,500 mark.
Yeah. Here's the other thing too that a lot of people have been asking about UPS and FedEx, and they're like, UPS came out with earnings today, and the reaction wasn't so great, even though they beat. And this was my concern about UPS. To your point, seeing all the Amazon trucks everywhere, I think that FedEx and UPS and even the United States Postal Service are in for a rude awakening, because I'm expecting all of that to what you're saying, but also the parcel delivery service side of their business, I think, is going to absolutely dominate. And I bet that we hear something from them about the increase of their in-house parcel delivery services, because, and if that rings true, we've already heard stories about how they have their own airline company. They're looking to expand upon that. That kind of got put on hold because of the Rona. If they talk about anything as far as that's concerned, look out for UPS, FedEx to take an absolute dump, because I think that's probably what ends up happening here. And I warned you guys about this, for those of you who are big on UPS and FedEx, that to play the short-term pops here and some of the increase in demand, especially with the holidays. But I don't think that we see the kind of demand from UPS and FedEx like we saw previously, especially if Amazon continues to expand that parcel delivery service side of their business, because I think it's going to be huge.
Yeah, absolutely. Yeah, it'll be interesting. I think FedEx or UPS, it's going to be who pivots first and quicker. What's interesting is like Etsy is USPS and FedEx.
Yeah.
And Shopify is USPS and UPS. Right.
Yeah.
And so, how does that play out and who takes over that space? But I do agree that if one of them can see the writing on the wall and make a move and transition, they can sort of mitigate it, but somebody's going to get left behind.
Yeah.
But man, and honestly, I personally would think UPS might be left behind. I feel like FedEx pivots a little bit more, but I don't know. But you make a good point. Like, that's taking over such an important piece of business, and we'll see how that goes moving forward. But the one thing that I was curious to get your feedback on is the potential impact of all these workers, because they're talking about hiring all these workers, which seasonally they typically do.
Yeah.
But they've had a couple of waves of mass hirings, which on the surface should be a catalyst, because you're like, oh, that means more demand. But one of the issues with which they talked about last earnings was COVID costs. And we've seen that with a lot of companies in their earnings, is a rise in employees clearly a good thing, clearly a bullish sentiment, bullish indicator, or could it potentially be a hindrance because of the rising costs and it eating into your margins?
So you bring up a really great point. We saw that with Domino's, and we saw that with Chipotle. Obviously, those are a little bit apples to oranges comparison when you compare them to Amazon. If I'm going to look at an apples to apples comparison, I'm going to look at Walmart. And Walmart's earnings last time around didn't really indicate too much of a dent into their earnings, or really their bottom line all that much when it came to their earnings call. They came in last quarter at 124 estimated to 156 actual, and they ended up beating. And really the impact on extra PPE wasn't really that much of a detriment to them. This time around, it might make a difference. I guess we'll have to wait and see on that as far as Amazon's concerned. But I would imagine, and this is just me speculating, I would imagine that they would have figured that out, because it's been 6 months for them to kind of get this figured out as far as how they're going to be able to make it more efficient and more cost effective for them to kind of still keep everybody safe, and from their drivers to everybody in their factories and all that good stuff. So I don't think it really changes my mind or sways my feelings about how much Amazon's going to continue to beat, but it's definitely something to think about for sure.
And if they come in anywhere near either one of ours, it will be the best quarter in their history.
Yeah.
Which last quarter was their best in their history.
Yeah.
So if they do that, man, it'll be interesting. What was the move last? So July 30th was last earnings.
Yeah.
It ran up into it, if I recall correctly. Did it?
Did it? That day it ran up into it, but after earnings it gapped up and ran all the way up to 32.50, and then from there over the next couple of weeks it went up to as high as 35.52. So if we see another quarter like that, then I think 3,500 is going to be here and gone rather quickly, in my opinion.
And it begs to repeat, what matters, though, is forward guidance.
Yeah.
What everybody wants to hear is, what are you going to expect out of this holiday season? Because I think everybody's expecting monster.
Yeah.
What's more important, Brad, is not how much they beat by. In my opinion, what I think, if they come out with an earnings estimate above $10 a share, move for next quarter, I think this thing goes off.
Yeah.
Like if their forward guidance increases, I think it goes off. But if they do not give guidance because of uncertainty, it's going to be bumpy temporarily.
Mm-hmm. Yeah, I agree.
So I think the story is kind of the same for the next few months for earnings. Like, do you give guidance, and how does guidance look? But man, they should be blowing it out next quarter for sure.
Yep. Steve brings up a good point, says stocks move on forward guidance and not what's going on currently or in the past. And that couldn't be more true. I couldn't agree more on that. Real quick, I see a lot of people chatting about Overstock, and we were just talking about this previously, but Overstock's making a move here. It's up 1%, making some pretty decent moves over the last 10 minutes. I'm not sure what's changed about them other than the fact that maybe there's some anticipation on earnings here, but yeah, this will be theirs is today, correct?
Yep.
So this will be one to watch out for as well.
Sorry, I think we said it's pre-market tomorrow.
Pre-market tomorrow. So we'll be obviously reacting to this either way tomorrow. And yeah, so this is probably running more than likely into earnings on some pretty high expectations. I would imagine that's probably the only reason I see this moving.
The other stock that's pre-market tomorrow that probably people want to know about, Spotify, reports pre-market tomorrow. And I must say I'm a little bit surprised. Well, I guess I'm not, because this seems like a common trend. It's lost at 61 cents a share, which to me seems that seems like a big ass loss.
It's a bit egregious, yeah. But their last earnings per share was a loss of $2.14. So maybe not.
That's what it came in at.
Yeah. And so they're a loss at $2.14. We'll call it 15 cents if you round up, but they still spend, I mean, and maybe I haven't looked too much into Spotify, to be honest with you, as far as what their balance sheet looks like. Do you have any idea what their strategy is? Is this another one of those cases where they just grow at all costs? Because if they look like this as far as their profitability is concerned, and they're still spending hundreds of millions of dollars on influencers like Joe Rogan, what does that look like for their bottom line?
Yeah. To me, Spotify is the DraftKings of this industry.
Really? Okay.
You know what I'm saying? Like,
yeah.
You know, and it's a great example, because let's tie back Barstool. Barstool has some of the best partnerships in the podcast world, and they leverage their fans, where it feels like all Spotify is doing is throwing money at people. And what actually has happened with Joe Rogan, which I would argue hasn't been a great transition.
No.
There's been a lot of issues with that.
Yep.
Not only from a PR perspective, but other podcasters that built that channel. For example, there's a guy, Joe Budden, who's a really popular DJ who had the #1 podcast. I'm pretty sure he left, or he was threatening to leave once that Joe Rogan thing came out, but they're throwing money at people. And I think what's going to happen is there's going to be a downstream impact for the existing podcasters who are like, well, now I need money.
Right.
And two things are going to happen. Spotify is going to continue throwing money, which is not good for the balance sheet, or it's they're going to piss a lot of people off, and they're going to lose a lot of podcasters, which is going to lose some of their people. So I like Spotify. I like how they're moving towards video. They're trying to compete with YouTube.
Yeah.
But we have experience with both. I think they could end up getting there, but I think it's going to take years to go, and I think there's going to be a bumpy ride. But yeah, I think they are trying to grow at all costs right now and just kind of getting ahead of the game, and it's kind of scary how they're approaching it.
I mean, how about Joe Rogan laughing all the way to the bank, man? 100 mil just to talk to celebrities all day? Give me that damn job.
And to be honest, he never confirmed it, so I think that's on the low end. You know, especially with like incentives and stuff. Like,
yeah, I mean, Christ Almighty, that is crazy, unbelievable.
So the last thing I'll say is back to Barstools, which we both love. To a person, people like every podcaster that works at Barstool loves the company, loves them, and talks about the experience they have with them. And I think that's going to be a sleeper for Penn, not only the Barstool Bets, which gambling obviously is a bigger thing, but I think that's going to be a sleeper that people don't see. The revenue that comes into podcasting, again, because of their community, I think it's going to have this like integrated effect where it's like, it's going to surprise people how they leverage the community, but then all these different podcasts are bringing in new people, which is going to benefit the other platforms that they're using, i.e. Barstool Bets.
Yeah. Yeah. I agree. I mean, and this is why we love Penn National. We love companies that have a cult-like following, and that have something, have a foundation to stand on. Whereas, like, you look at your DraftKings and Spotify, and even when we talked about Uber at growing at all costs, there's no real personal connection that they've been able to make with their community. And that's what we try to do. I mean, that's what we stand by. We stand by competing on relationships, and the relationship that we've created with you guys, our viewers, and those of you guys in our chaos crew. We strongly believe that the best part about your business is the relationship you have with your audience and your customers. And that's what, and it's proven to be the key to success in business across the board. And so when we look at companies like this, it just makes us scratch our head a little bit and kind of be hesitant. Not that Spotify hasn't done a good job, and obviously they have. Otherwise, they wouldn't be in the position that they're at. But some of the decisions that are being made kind of come into question a little bit because of the lack of sense of community that they've been able to build. I mean, you look at Amazon, for example. They don't necessarily have a community, but they certainly put you guys first in that the algorithm that they have created, and Netflix is the same thing. We've talked about this before on our other podcasts as far as business is concerned, but it all ties together, creating that essential relationship, knowing what you like so it suggests it for you is absolutely key for it's the success of Netflix and Amazon and a lot of the other ones as well. So the only problem is that it seems like Spotify is just spending a ton of cash. So we'll see if this actually pans out, but they have earnings tomorrow, and it looks like perhaps maybe they'll have a bumpy ride here moving forward as well. We'll see what their earnings look like.
Yeah. And Bodie Beard, I don't think we were bashing Joe Rogan. We both are obsessed with Joe Rogan.
Yeah,
so
I love that guy.
We're talking about Spotify, not Joe Rogan.
Yeah.
We aspire to be him.
Yeah.
Don, I'm not sure. The return back is we brought Joe over, and that brings more audience to potentially view you, the creator. I think I understand what you're saying, but I'm not exactly sure if you can clarify. I think what you're saying is I understand why they paid for Joe and trying to get a return on the 100 million. But that's predicated on they need Joe to bring subscribers. So they need paid subscribers. And I think it's a good move, but I think what I'm saying is the downstream impact, because if they end up having to throw money at all these other people, you can't pay 100 million
to everybody,
20 million a year for, everybody. So I think it's a tough, Joe Rogan's a smart move, but if that's your only strategy, I worry about that because they don't have a base, but I do love their platform.
They have Alex Jones too, which has also kind of created some controversy as well. So,
what'd you say?
They said they also brought on Alex Jones, which has created a lot of controversy as well.
Yeah, because I was like them trying to censor him, but now he had him on, and it's his latest episode, which I'm looking forward to hearing. Which there was all this speculation around there, but I think it'll get figured out. And I think Joe Rogan is like, he's trying to, man, I can't say it other than saying it explicitly, but he's bringing that big dick energy. Like,
Yeah, right.
like I think that was such a power play
Yeah,
on his part. I love Joe, man.
I do too.
So Eric said Snap is up 3.5%.
Yeah,
Some good
it looks
news.
as if the market overall is starting to try to make a move here. I was just looking at some things as we were talking. Not a crazy move, but it looks like some buying is starting to return. Don't get your hopes up, folks. I don't think this is something that lasts, but it is starting to move up a little bit just looking at the overall market. Still down a ton. We have Dow Jones, which is down almost 3%, S&P in the same boat, as well as NASDAQ. So still a rough day overall, but it looks like, maybe they're starting to settle out a little bit. I'm actually a little surprised at this. Usually towards the end of the day, when the markets are down this much, you start to see kind of like a huge push downward. And we're actually not seeing that. So there's no acceleration of selling, which is actually a little bit positive, but I don't know if I would be super excited about this move just yet.
Yeah. And I don't see anything in particular for the move news wise.
Yeah.
But good for all us Snap holders. All right. What else we got? If Don, they allow video.
Yeah. So, real quick, let's go over the earnings that we have today. And so if you guys are just joining us, we have 485 folks in here. Guys, thanks for hanging out. We really appreciate it. If you could give us a like if you're getting value out of the stream, we certainly would appreciate it. And it'll continue to push our stream out to get more folks in here. So we certainly would appreciate a thumbs up. If you guys want to be part of the conversation and in the chat itself, or if you would like to get a daily watch list from us, as well as access to our public portfolio, make sure you're hitting the join button. Become part of the Chaos Crew. We would love to have you over. It helps support the channel, and we get to, like I said, interact with you guys on a more personal level as well. Get that watch list out to you. And just love to have you over.
Real quick before we get into that, I don't know if you knew this. It looks like it's just coming through, but France is imposing a nationwide lockdown.
I did not see that.
So it'll be in place at least until December 1st.
Oh, wow.
But so like the legit lockdown, can't leave unless essential goods.
Jeez.
The Los Angeles Dodgers retweeted it.
Did they really? Oh man, that'd be hilarious.
All right, so earnings for after hours. So we have a few that, and I'll remind everybody on what our numbers were from yesterday. And let me know if you want to add any, but yesterday, so Etsy, is Etsy after hours?
Yes. Etsy, Fastly, Visa.
Pinterest.
Is Pinterest today or tomorrow? Pinterest today?
I had it as today, but I'll double check that. And then
Okay.
MasterCard.
Yeah. MasterCard already was today. They missed.
Okay. Was that this morning?
Yeah.
Ooh, they missed? I didn't even see that.
They did.
Oh, that makes Visa even more interesting.
Yeah. Because I had Visa. We had Visa beating, correct?
We did have Visa beating. So I'll give our numbers. And
Okay.
Pinterest is today. So Etsy, we have estimates of 58 cents a share. We think they'd be handily. I have 79 cents a share. You had 87 cents a share. So you had a pretty solid beat. Visa, $1.10 a share. I had $1.16. You had $1.19. What did MasterCard come in at? Because it was $1.66 was the estimates.
Yeah, MasterCard came in. Let me see.
So MasterCard, our estimates were $1.83, and you had $1.72. So we got that one wrong.
Yeah.
But we did say Visa was the one.
We did say Visa's the one, and it's no secret that we like Visa out of all the credit card companies, really. So it says that it was slammed after weak travel spending pressure, and this is kind of why we didn't really like American Express too, right? Fat Man Zoom. So it doesn't really come as much of a surprise because they rely so heavily on that, and that's kind of the difference that it makes as far as Visa is concerned, because that's not something that they really rely on as much. I'm just looking. The revenue for the third quarter declined 3.84 billion from 4.12 a year earlier. They came in at $1.60. It looks like Mastercard saw its adjusted earnings per share for the third quarter at $1.60 compared to $1.65 expected.
Yeah. Okay. Cool. So that was Mastercard. Pinterest, 2 cents a share. We already said that. You had it at 3 cents. I had it at 5 cents. Fastly break even. You had it at profit of 2 cents. I have it at a loss of a penny. And those are the main ones. If you guys want predictions on other ones, we can certainly do that.
Let's do Callaway. Callaway's is today, right?
Yeah.
So what was Callaway's?
So Callaway's, I gotcha. ELY, right?
Yeah.
27 cents.
27 is what we said?
Yep.
Okay. I'm going to go ahead and say that they beat. And I'm going to say that they come in at, and this is an educated guess, guys, because we didn't do a whole lot of research on this. I'm going to say that they beat, compared to what they did last quarter, I think they come in at around 36 cents a share for Callaway. That's what I got.
I actually, okay. I thought that was the same number. I have 32 cents a share.
Oh, so pretty close. So we both have Callaway beating. I know this is kind of one we just kind of pulled up today and really started talking about it. I mean, the acquisition of the entire all 100% of Topgolf is really kind of what got me going on that. So I'm not in Callaway, just so you guys know, but this definitely has my attention for sure for a lot of the reasons we talked about. I know we talked about it a lot earlier, but it's going to be interesting to see how this looks. I really want to see what the earnings look like this afternoon. I'm really, really curious about that.
Yeah. Man, I actually legit want to get into it.
Fat Man Zoom got a boner candle for Callaway right now. I'm gonna get
a half starter position.
Okay.
Let's see where it's at. So ELY. Actually, it's gone up a little bit, so it's starting to come back up like the other one. So it's down 18%. It's a 1582.
It's actually moved up since we talked about it. So
wasn't it down like 20%?
Yeah.
Okay.
To Don's point, this is a point we brought up to everybody else, Don, and say, keep in mind, I started golfing this quarter, and those are my clubs, my bag, and the balls, and everything. So, I mean, that was kind of the point we were trying to make, because everybody was taking up golf this season because there wasn't much else to do. So, Steve bought some Callaway too. We're in it together, folks. It's ride or die.
I'm just buying 100 shares.
Let's not go crazy, but this should be interesting.
We're in, baby. We're in.
Landon says my prediction is that it goes to 17 after hours. We'll see. That would be awesome if it does.
All right, I'm going all in.
Jessica's into.
Just kidding. No, don't do anything because of me. Literally the last person.
You know what's going to happen. Well, Fat Man Zoom said.
Dead League said, fuck it. Listen, hey.
YOLO, baby.
We rise together, we fall together.
That's right.
Oh, man.
Let's do it. All right. Yep, fuck it. All right, fine. I'm doing it too. Why not? We're not going crazy. Just so you know, we're not going crazy on this, but I'll go ahead and get some as well. What the hell? Why not?
You brought it up this morning.
I brought it up this morning because of that news that I saw. I thought that was great news. But yeah.
Don's in.
Don's in. Don's what it look like. If you guys are getting into this, make sure you're doing it with money you can afford to lose. Just a full disclaimer. But you know what? We've been talking about so much. Why not?
I'm going to tell you what my strategy is going to be.
Okay.
I'm half position size.
I'm going to switch this out here.
I'm half position size. I'm going to look at earnings tomorrow. I'm not going to do anything until the market opens tomorrow, but I'm going to look at earnings tomorrow. And if I like earnings and it drops, I'll probably go to starter position size. So I'm half. So my starter position is usually 2,500. I'm in 1,500. So I'll go full starter position, which is 25. I'll be in $3,000. So I'm going to do that tomorrow if I like earnings.
Okay.
So we'll see how that goes.
So I'm getting into ELY as well. Going in through Webull. So you guys will see this on the updated portfolio. If you guys want to catch the portfolio, make sure you're hitting the join button, becoming part of the Chaos crew. I'm going to go in. I'll do 100 shares as well. Why not?
Even Kings, you know what?
What?
You're doing 100 shares?
Yeah.
All right. You go proportionate to account size.
Yeah. Oh, yeah, that's probably true. I should be a better example. Let's do 50. We'll do 50 shares.
Don bought 101 shares.
101. Of course he did. Of course he did.
Hey, I'm fine with that as long as we're all winning.
That's right.
That's what you want. You just want to. We want all the excitement together. So
we do. Yeah, I want to be. I want to be able to celebrate with everybody. If we or we will commiserate together. One of the two is going to happen here.
Yes, absolutely.
So if we get to commiserate, I'll commiserate with you guys. I got in at 1574.
Okay. Woo. All right. You see, this makes it more fun.
It does make it more fun.
1574. All right. All right. So which one do you want to start with?
As far as what?
Earnings.
Etsy. So we haven't talked about Etsy at all today. We talked about it a little bit yesterday. Haven't talked about Etsy at all today. And so I think that this could be a good one. And the thing of it is, it has me a little bit worried. It started to come down today, which I'm a little bit more encouraged by, because my worry was that this was going to continue to roll. And I thought that perhaps this would the price would be a little bit baked in the earnings. This has come down today. Our expected earnings per share are, what did we say, 58 cents?
Yep.
I think they come in, and what was my estimation? I thought it was pretty.
87.
What was it, 80?
87.
87, yeah. Then I'm going to stick by the 87 cents per share. The reaction here is kind of what I'm worried about, and it still is pretty high compared to when it started to get bought back up earlier last week. We saw this move from 131, now sitting at 140, one as high as 147. So I'm a little bit apprehensive to be owning Etsy beforehand. If you guys have been in this for a while, we have a lot of people in the Chaos crew that have been in Etsy since the low 100s, even lower than 100. We've been talking about it since the mid 70 range as a clear buy and hold. So if you guys have been in since then, you probably don't have a whole lot to worry about. But if you were planning on buying Etsy in anticipation of an earnings beat, that's where I think the most amount of risk comes in, as it always does, but especially with it sitting all the way up here.
Yeah, absolutely. And for Etsy, we've been talking about it for a while. Even though the move, it's had some pullback. I'm still up 7% on it in my account.
Yeah.
But yeah, it'll be interesting, man. I don't know. We'll see what the guidance is. But I had mentioned yesterday, $2 billion worth of mass 3M reported.
Yep.
So that was one of the key drivers for Etsy last quarter. And I think demand would increase for the mask. So I think they're going to see some huge revenue numbers, and not just masks, but like that's a huge opportunity. And then on top of that, online shopping, personalized experience. Etsy is just a beautiful company. And I think it's going to show us why S&P decided to put it in.
Yeah, I agree. I agree. One other earnings call that we forgot about was Zynga. Is also after hours today, which I also own here in the public account as well. So Zynga, this is one that I actually ended up getting into. 921 was my average, sitting at 941. They have earnings here. Estimated earnings per share last quarter was 8 cents per share. Actual came in at 10. I think they come in. Their estimated earnings per share now is just escaped me here. Let me just double check.
9 cents.
It's at 0 cents actually. Oh no, I'm sorry. Wrong ticker. Got fat fingers here. 9 cents is what you said.
Yeah.
Yeah, 9 cents. So I think they still come in. Maybe 11 cents is probably what I think they beat by. This is one of my top 5 stocks a couple months ago that was under $10, and they've done really, really well. This is one that you probably want to get into if you have fears of a second shutdown, because it went berserk during the first go around. So I think that if this is something that you have weighing on your mind, there might be a lot of people that have that same sentiment. We could see it increase demand in Zynga. If you guys don't know what they do, they are a gaming company, specifically within mobile gaming, and they had a rough go around between last year and the year before. Have started to turn things positive here, and I think Zynga continues to do well. I like Zynga going into earnings. I do have 100 shares. Haven't decided yet if I wanted to hold on to the entire position, but the closer I got to earnings here, the more confident I felt about them. I'm going to go ahead and continue to hold on to Zynga here.
Richard 724 said, "Man, with that rant, you got me pumped. I jumped in on 1,000 shares."
I hope he's not serious with that.
Nobody gives me shit.
We put out that disclaimer, folks. We put out the disclaimer.
But I'll take credit if it blows up.
That's right. It was all us. If you guys make money, it was all about us.
I think Zynga's earnings are November 4th. I think this is one of the ones that was like weird.
Oh, was it?
Okay. Yeah.
Okay.
Oh, Richard, I believe you. I believe you're in.
Nobody's doubting that.
Oh, man. Let's all get in for Amazon. C-Buck says, I think we're all in for Amazon.
Yeah. I don't think there's
everybody here has Amazon. Unless you just can't afford it, which is fine too. But yeah, I think we all have Amazon. But man, tomorrow's going to be wild.
Yeah, it is. All right, guys, if you're just joining us, first of all, welcome to the channel. If you're not subscribed to the channel and this is your very first time seeing us, we certainly hope that you would hit that subscribe button. And if you guys are interested in becoming part of the Chaos Crew, make sure you're hitting the join button. We'd love to have you guys over there. But we are live right now, and looking to get our live reactions to a lot of the earnings that are going on. We have Etsy, Visa, Pinterest, Fastly, Callaway, and I'm sure there's others that we're missing. We'll probably go ahead and give our own reaction on, because there's just so many that's going on. But if you guys want to hang around for that, we have about 6 minutes, 6.5 minutes, 5.5 minutes before the market closes, and we're super pumped for what's about to unfold here. And we're also going to be here tomorrow. We're going to be here tomorrow from 8 a.m. all the way through the entire trading day, through after hours, to give our live reactions as well on all the craziness that is going to go on tomorrow with earnings too. We are super pumped for it, one way or the other. It's a shitty day in the market, guys, and we're still having a great time, and that's what it's all about. I'm loving it, man.
Yeah, Bodie, Callaway is after hours today. I mean, we will know in the next 20 minutes if we are all a heaping bunch of idiots.
I know.
That's why it's fun, is because we'll know right away. Like, this is instant gratification or misery.
Yeah.
So Rocket has been a huge disappointment so far, says Eric Black. Yeah, I think we're all disappointed in Rocket, but we also are we've also known that it's going to be a bit of tough sledding. I think we need to stop saying it's a buy, because we've already in it, but it's a hold.
Yeah.
Hold on to it.
Right.
If you're not in it, it's a buy.
Yeah. I mean,
but
we our convictions haven't changed about Rocket. Let's just put it that way.
Amazon is going to sting if it surprises to the downside. Yeah.
Sure will.
All right. So how's the market doing overall? Is it still buying returning, or is it going back down?
It's coming back down here. So selling has accelerated. Nasdaq's now down 3.5%, as well as S&P and the Dow Jones. So, anyways.
All right. So we got about 4 minutes to the bell. Let's see what other questions we got here. Bratz, thanks. Thanks for the donation. I think you're idiots, because Callaway's earnings are on the 4th. Are they on the 4th?
No way. They were today. I hope he's fucking with me.
I'll tell you now. That would be really hilarious. Everywhere I see is the 28th.
Everywhere I see is the 28th too.
Ringo was the one we thought might have been on the 4th.
Yeah.
But I'm glad you hey, listen, cost you $10 to make that joke. Appreciate you.
Yes.
Appreciate you, brats.
He's not. It says 11-4. There's a lot of people that are saying the fourth.
Damn.
Did they move it?
L. Don Rudy. Where are you guys seeing it though? Because I looked at 2 different places. I looked at Yahoo and I looked at CNBC.
Motley Fool says it's today. I'm just checking. Motley Fool even says it's today. Did they just automatically up and change it or what?
Are you guys talking about Zynga or are you talking about ELY, Callaway? 11-4. All right, I'll look at Thinkorswim.
Just switch to ORLY.
O'Reilly?
Zynga's 11-4. Yeah, we know about Zynga. So Thinkorswim is what they say is reporting earnings at 11-4. That's the only resource that I'm seeing people are reporting it on.
Well, TD Ameritrade, which I'm looking at right now, says 1028.
Okay. So I guess we'll find out one way or the other.
And Dolphin says that Thinkorswim says 1-4.
Jesus.
No, I think I'm at 11-4.
Yeah.
All right. That's annoying. That's so annoying that there's so many, like the dates can be. But I feel,
Yep. Well, I guess we'll find out in about 2 minutes.
Yeah, exactly.
Oh, shit.
I'm actually going to pull up the Twitterverse because usually they start talking about that. All right. Okay.
Oh, my God. I'm going to laugh at it. It really is 11-4.
Wait a sec. No, I think it is today.
Nobody knows. Oh, my God.
Just today, this is Twitter, so I don't know. I got to confirm this, but they pre-announced their results. Earnings per share 60 cents. Yeah, I think it's today.
We'll find out. Market closes in 30 seconds.
All right. I can't pull them all up. We'll give one to Don to stay on top of.
Yeah, let's do that. Don, you game for that?
So I'm going to I'll take Callaway.
Okay.
I'll take Visa because that's the one I like.
Yep.
Do you want to take Etsy?
Yeah, I was going to take Etsy and Pinterest.
All right, Don, can you take Fastly?
Keep an eye on the Fastly earnings, Don, and report the numbers when they come out. That's going to be wild.
So I'm going to do I don't know how we're going to do it tomorrow. We're going to need a couple crew members to help us out.
Yeah, I know. It's probably going to be wild tomorrow.
So I got Visa. Okay, cool. I am set and I'm ready.
Let's do it. So market is officially closed. We're about a minute into after hours trading. Let's take a look at Etsy after hours. Right now, it's up about 0.1%. Not much movement here going on so far. I'm going to switch to a 5-minute chart just so we can get immediate reaction here. So far, just kind of normal trading activity on that. Checking in on Visa. Still no real activity there either. Pinterest. Let's take a look at Pinterest. And Pinterest is all over the place. It looks as if maybe their earnings are out. Let's see here. Pinterest looks really good right now. Pinterest is going the hell off. Pretty wild trading activity right now. So far, it's up 2.5%. I'm going to actually check in on Pinterest earnings to see if we have any official word on that just yet. Nothing so far. This thing is rolling right now. Looks really, really good. Pinterest is now up 7%. 7%. Pinterest is up right now. They just announced earnings. It looks as if they beat. No official word on this just yet. Still just kind of waiting to see what happens with the guidance. Quarter revenue it looks like they've lifted their quarter 4 revenue up 60% year over year. Came in 16 cents versus 0.01 expected.
Damn.
Jesus Christ. Pinterest absolutely annihilated earnings, guys. It is now up 10%. Pinterest is going the hell off. They absolutely crushed earnings. Actual earnings are 16 cents per share, expected to 0.01. Holy cow, that thing is freaking rolling. Now up 12%. I can't even keep track of it. It is still rolling. This is unbelievable. Pinterest is going the hell off. My God, look at this thing. Jesus.
We have a nice super boner, quite a lovely green one.
All right, let's check back in with some of the other ones. Looking at Visa. Visa's up slightly. Starting to get bought up here after hours. Checking back in with Etsy.
Yeah, I think the crew's right. Callaway is probably November 4th because even Callaway's investor relations site doesn't have anything at all.
So now we're even bigger idiots.
No, it looks like the 4th because they reported on August 6th, so that would make sense.
Well, F it. We're in it now.
All right. Visa. Fastly will be a little bit later, Don, so if it's not coming up yet, it'll take a second. It looks like it's probably going to be closer to 4:15.
Brats, that was money well spent. So Callaway has earnings next week, folks. That's so annoying.
T-Doc? Is T-Doc?
Teldoc had earnings today too, yeah. That was actually on the watch list this morning for the Chaos Crew folks. It is up 1% after hours right now. No official word on earnings just yet. I don't see anything for them just yet. Checking back in with Etsy.
You got me, brats.
You really did. Pinterest is still going the hell off. It is up almost 16%, sitting at $56.70 per share. Holy shit, this is crazy right now. This is unbelievable. Pinterest is going off.
What did they say?
Well, they said their outlook is expected to be 60% growth year over year next quarter.
Well, it's context. So what was it last? What was it year over year this quarter?
This quarter, revenue $443 million versus $399 million. So that's a pretty steady increase. I don't know what the percentages are on that just yet, but looking here. Haven't seen their active users increase just yet on that either. So
Visa reports they beat earnings per share at 112.
boom. So Visa is crushing it right now. It's actually up 1.5% now, 184. So this one looks pretty good. Let's go back to the daily. Last time they beat earnings, came in at $1.07. What was their earnings this time around?
$1.12. Their revenue beat slightly as well. The estimates were $5 billion. They came in at $5.1 billion.
So far, so good. So far, so good. Etsy moving here a little bit. It's up 1%. Still waiting on some official word. I don't have anything yet on Etsy. But as soon as I see something, I'll let you guys know. Let's see here. Etsy reports. Here we go. 70 cents a share versus 62. So it didn't quite get up to 87 where I expected it to, but they beat nevertheless. Price action here is a little bit all over the place. Right now it's now down. Yeah, it's everywhere. I can't give confirmation on exactly where it's trading at right now. It is just all over the place. It's now down though, just slightly. So we'll see where the reaction goes here. Revenue $451.5 million this quarter compared to the estimated $419. So really huge move there. Their guidance for next quarter is going to be around $459 million to $513 million versus the $446 estimated. This is a pretty good move. Expected 85% year-over-year growth. That's pretty impressive stuff. Etsy is now starting to get bought up here. We'll see where this moves, but the price action here is extremely erratic. It went up as high as 145.66, pretty decent spike up here, but we're starting to see some buying going on. This might have a little bit of a delayed reaction. Pinterest is finally cooling off a little bit, now down to about $56 from its $57 high. What a move, man. Pinterest just freaking nailed it. Absolutely nailed it.
That's awesome. That's so awesome. Pinterest.
I can't believe that. 16 cents. Wow. Wow. Unbelievable.
So it looks like 49% was the revenue year over year.
On Visa?
Pinterest.
Oh, Pinterest.
Looks like that. So then they're expecting even greater growth.
Yeah, I mean, their breakout into the global markets was huge for them last quarter. They kind of talked about that last quarter. I'm curious to see if that actually increased as well. That might be some of the reason why we're seeing this buying here. Pinterest looks great. Fastly. Yeah, actually continuing to sell off here. Not quite sure what's up with them just yet. I'm actually...
I think they came in. Yep. All right, here we go. Fastly, loss of 4 cents versus 1. Well, we said break even. So loss of 4 cents. Oh, sorry. Yeah, loss of 4 cents. Ooh, revenue 71 million versus 70.6. And the guidance is a loss of 8 cents in the fourth quarter. Revenue 84 million.
That's tough stuff. So we missed the ball on that.
Who did?
I did. You didn't. You actually, what would you say? 0.01 loss was your prediction?
Yes.
And they came in at 0.4?
A loss of 3, I think is what I said.
Loss of 3. Okay.
Loss of 4. Sorry. Loss of 4. Yep. Damn.
So Fastly selling off here. They're down around 3% from the close. Tough stuff for Fastly. Really kind of surprised by that. I still think that they're a good company. We'll have to look into some more of their details there, but tough stuff preliminarily on Fastly. Checking back in with Teladoc, they actually looks like they missed earnings as well. This thing is selling off quite a bit. It's down 7.5% after hours. Visa's still looking pretty strong. Look at Pinterest. Jesus Christ, it's still rolling. $58.65 now, $59 a share. It's up 20% after hours. Holy shit. That is crazy. Look at this move on. And I'm going to check back in with some of the other. Let's look at Facebook real quick. Is Facebook reacting to this news as well? It looks like it actually is. Facebook is moving up. Checking back in with Twitter as well. Just checking in on some of these other social media platforms, folks. Yep, look at Twitter. These social media platforms are reacting to this Pinterest news because of anticipation of tomorrow's earnings looking rather good too. You have Twitter that's up 4% as a sympathy to Pinterest. Facebook is up about 1.5%. Man, this is incredible.
eBay beat as well. Some people were asking about eBay. eBay beat their estimates were 77 cents a share. They reported 85 cents a share. Their expected revenue was 2.48 billion. They came in at 2.6 billion.
Damn. I didn't even know people shopped on eBay that much still. 2.6 billion. Ford blew up. Did Ford have earnings today, or I thought that was tomorrow?
Ford beat as well.
Yep, they did beat. It's so hard to keep up with all these. Gilead had earnings too. Grubhub had earnings. So just looking at Ford, it's actually down right now. And you said they beat?
Yeah. So, yeah, they beat handily. So the estimate was 16 cents a share. They had 65 cents a share. Revenue beat by 5 billion. So estimates were 33 billion, and it came in at 37.5 billion.
Wow.
EBITDA, all this looks good. Their adjusted EBITDA for fiscal year 2020 was a loss of 500 million to break even. So all this actually looks really good for Ford.
65 cents. That's a really strong beat there. But this kind of goes to what we're talking about, right, folks? Because, I mean, we said that there's, a lot of people that weren't looking to take mass transit and that sort of thing. And now, we said that there was going to be much higher demand for buying cars, both new and used. And this is showing to prove evident here with these pretty strong earnings beat with Ford. That's crazy. That's a pretty incredible number there.
Yeah, for sure. What else we got in here?
Just going back to look at Pinterest, just checking back in here. I just can't believe this move. It's up 21%, still rolling here, up as high as 59.72. Wow. This thing is just crazy. Absolutely crazy. Visa's still looking great too after hours, on a pretty decent beat as well. Guess we're gonna have to wait a week on Callaway. Oh man. Hey, listen, guys, you know what? We are human beings. And we apparently made a big old mistake on when Callaway's earnings were. So there, it looks as if they actually do report on the 4th. Is that right, Christian? Can we confirm that it is actually on the 4th?
Sure.
Okay.
I think the 4th is a fair one. So Earnings Whisperer and apparently Thinkorswim. So yeah.
Okay.
So it makes sense. It was on August 6th.
It's so crazy when there's always conflicting. I mean, yeah, it is crazy when there's conflicting reports as to when earnings are. Sometimes they're a little funky, but it doesn't really. To be honest with you, it doesn't change my convictions about Callaway. I think Callaway is still going to do good. So.
Yeah. So here's an interesting piece of information from the Twitterverse. Rounds of golf were up 20% year over year in July, making it the biggest increase since 2000 month over month.
That's crazy.
Or sorry, for the summer month. Yeah, that is wild. All right, come on, baby.
Zynga is also up slightly here after hours. Let's see here. Their earnings are next week as well, if I'm not mistaken. We talked about that, right?
Yeah.
So they're actually looking pretty good. After hours here, I talked about this earlier today, guys. Why I feel like Zynga should do well. Their earnings are also next week. Got in on this one at $9.21 a share, so feeling pretty good about that. Pinterest is still rolling here. It's up 22.5% rather. Excuse me. Sitting at 59.71. This looks like it's going to hit 60, folks. Ford is also making a move now here. It's up to $8.25 a share. It is rolling now. It's up 7.5%. Looks good. Looks real good here.
T-Doc.
Still getting hammered.
Going down.
Yeah, it's still getting hammered. T-Doc is still getting hammered big time. All right, we're going to do it.
We have a nice super boner.
Ford
Quite a
is
lovely
rolling.
green one.
Ford is rolling. It's up 830 right now. 830 a share, sitting up above 7.5%.
Mm. Damn.
It is rolling. Facebook and Twitter are still rolling here as well in response to Pinterest's earnings beat. And Pinterest is now up above $60 a share.
Snapchat is almost up to 5% on the day. Is at 43.45, so it's still looking really good as well.
Pinterest is rolling. Roll call. Who's in Pinterest right now? Who can we celebrate with on Pinterest as this thing continues to just take the hell off? Coming up now, up over $60 a share. This thing is absolutely going insane.
Mm.
Wow, look at this stuff. I mean, unbelievable move. Julio's in. Trevor's in. Both Trevors are in. Pinterest continuing to roll here. Now it's up 24%. $60.48 highs here. Landon's got some. Hell yeah. Rajesh, I hope I pronounced that right. In Pinterest as well. C Mike's been in since $45.
Good on you.
Hell yeah. Nicely done, guys. Way to go. Way to go on Pinterest. Way to go on Pinterest. Unbelievable. That's crazy. Julio is up 200% on Pinterest. God damn. Nicely done. Richard's been in Pinterest. Only 100 shares, but hey, you know what? That doesn't matter. $25.53. That means you're well up over 100% on that bad boy. So way to go on that. Bodie as well. So nice job, guys. Nice job. Way to go. Somebody says sell that shit. I mean, it'll be hard pressed to not want to take some profits out of here. I always say taking profit never hurt anybody. So if that's your choice, then go for it. Yeah.
Well, we did have a prediction on our watch list, number 146, October 2nd, where we said $50 a share was on the horizon.
For Pinterest?
Yep.
Boom. There you go.
Blew that one.
Blew it out of the water.
All right, man.
This was fun. Can't wait for tomorrow. It's gonna be a wild ride tomorrow, guys. If you guys want to join us, we will be here at 8 a.m. and we'll be here live all day long. Hopefully you guys will be hanging out with us. We'd love to have you here. If you're visiting for the first time, please give us a thumbs up and subscribe if you want to see more live streams like this. Make sure you're hitting that notification bell as well. And that is going to do it for me this afternoon. Fat Man Zoom, what else you got? Anything?
Yeah, guys, join the crew.
Yeah.
I know you're thinking about it. I know you're kind of on the edge waiting to jump in. Jump in. Try it out. Month to month, it's worth it. So come along with us. Thanks for all you guys who are part of the crew already, the ones who have joined. Tomorrow is going to be wild. I got to get my sleep. So everybody rest up. We'll meet right back here tomorrow at 8 a.m. Eastern time.
Big day tomorrow. And yes, that's 8 a.m. Eastern time, Landon. Thanks, guys. We appreciate you so much. Hit that join button and become part of the crew. And we'll see you bright and early tomorrow. Bye.
Bye.